Today I just wanted to quickly go over some things, 2 or 3 things in particularly that we see quite often when comparing mortgage fee sheets and loan estimates. A lot of times, especially when it comes to first-time home buyers, but I say this all the time, that most people in their lifetime might purchase 2, 3, maybe 4 homes, or go through a mortgage transaction 3 to 5 times in your entire life, right? So I don't think there's much of an argument in the fact that you do something 3 to 5 times and you're not necessarily an expert at it. So I just want to cover some things that are often missed when you are comparing mortgage offers and fee sheets. I had a client recently that, through no fault of theirs, I understand that everybody wants to save as much money as possible, right? And I encourage that you get a comparison and shop your mortgage lenders. But I always say you want to do that up front. You want to avoid doing that, once you're in contract or once the proverbial rubber is meeting the road, right? If you've got 3 or 4 weeks to close, that's probably not the best time to switch lenders or do your comparison. So I would always recommend doing it at the start of the process, not in the back end. But that being said, things that I see quite often in comparisons is that whether it be maliciously or done by mistake, what I often see happening is escrows, your tax and insurance numbers. A lot of times I see a lot of competitors lowballing those numbers, right? And again, I can't begin to dive inside anyone's head and understand why someone's doing what they're doing, but the way that I see it is, if they're doing it maliciously, that's a problem, and if they're doing it by mistake, it's probably as big, if not a bigger problem, right? Because either they're doing it to pull the wool over your eyes, or they didn't know that they made a crucial mistake. Either way, you probably don't want to be doing business with somebody like that, right? So what I mean is, when somebody is lowballing your tax and insurance numbers, a lot of times, especially if you're purchasing a home and putting down a minimal down payment or under 20%, you're typically going to have escrows. You do, in some cases, have the option to waive those. We'll dive into that in another video. But if you have escrows, meaning you're including your taxes and insurance numbers in your monthly payment, by shaving those numbers or lowballing those numbers, what's happening is you're creating an illusion of a lower payment and a lower cash to close figure. Oftentimes, when you, as a borrower, buyer, refinance, whatever it is you're doing, when you're looking at your fee sheet, what are some of the most important things you're looking at? You're looking at your interest rate, you're looking at your total monthly payment, and you're looking at your cash to close, right? So if I take, let's say, your monthly property taxes that might be $500 a month, and instead of putting $500 a month, I put $250 a month, that's going to create the illusion that your payment is $250 a month lower than it actually is, right? Then, if we're collecting escrows, typically we're going to be collecting, maybe 3 months of your property taxes and 12 months of your homeowner's insurance. So that's another, 250 times 3, that's $600, $700, $800, that your cash to close figures are going to be off by. Sometimes much more, because let's talk about if you're buying a new build or something that requires more escrows. Now you're looking at, these skewed numbers, which are pivotal points in your making your decision on who you want to go with, right? And here's where it gets really interesting. Whether or not they did it on purpose, when those numbers are corrected and updated, what oftentimes is going to happen is is they're going to apologize. They're going to say, well, we're sorry, we don't set the tax and insurance numbers, right? So that's their plan or explanation if they're doing it maliciously, right? But here's the problem in that. Anyone who's been doing mortgages for any length of time should know that, property taxes are generally going to be included in that monthly payment if they're escrowing. And property taxes can be easily verified. Now, you might not necessarily have the exact figure at the time of the initial loan estimate, but you can look them up within reason, right? So you can verify them within striking distance to give the borrower or you as a home buyer or homeowner a reasonable expectation of what those numbers should be. So very, 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 very important. Remember, your tax and insurance numbers, your escrow figures are technically not lender fees, but because they are a part of your monthly payment, it's a very effective way of somebody with not so keen of a moral compass might get creative in misleading you into thinking that you're getting a better deal. And oftentimes, these lenders that approach you in the 11th hour, that's one of the tactics that they attempt to use in persuading you to jump ship and go with them. And again, the horrible reality to that is by the time you realize it, by the time everything is corrected, you might be a week from closing. So at that point, it's too late to switch. You're going to get an apology, and you're either going to have to, terminate and start over and run the risk of losing your earnest money, your option fee, any cost that you incurred for getting an appraisal inspection, or you got to close, with that deal. I hope this helps. If you have any questions, as always, feel free to comment below, reach out, direct message me, or give me a call. I hope everybody has a great day, and we will talk soon.